The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good morning, Money Masters and Treasure Hunters. Welcome to the February 20th wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely treasure your presence here today, and my outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. That is what it's all about. Let's go take a look at these markets here. Relatively flat this morning. Dow is off about 1.5, trading out 14,034. You have the S&P down 3 out at 1528. The composite off 7 points this morning. Trading down at 3206. Small caps off 2 points. New York Stock Exchange down 22. The index off 7 points, being led, I believe, by Apple. We'll go take a look at Apple in a moment. King dollar up 18 ticks, out at $80.73. Gold down $18 right now, out at $15.86. Gold completing at least a retracement to the 0.786 and a 1.618 butterfly buy pattern. You've got, but don't buy it here. Don't buy it just yet. You've got silver down 67 cents, out at 28.76 right now. Platinum was getting smoked earlier, down $55 right now, out at 16.43. But platinum is the metal that looks to be the strongest out there. So if you're looking to buy when these metals make a bottom, I would be looking into the platinum area. We'll go take a look at that stock chart, as well as anything else that you'd like. Give us a call at 877-927-6648. A quick peek here around the markets. You know, the DAX traded up strongly yesterday, taking a day off, at least at this point, up $4.90 right now. The FTSE is up 21 points. That's up about 0.3% over in Asia last night. The Nikkei up 95 points. We'll look at that stock chart. I do not believe that it took out its swing point of its 1.618 butterfly sell pattern. You got the Hang Seng was up 163.7%. The Shanghai up $14, about 0.6%. You know, this stock chart here, this one we're taking a look at. If you are if you're watching us on Tiger TV, you are seeing the stock chart of the Dow. If you're listening on the radio, thanks so much for doing that, or maybe tfnn.mobi. Remember, this show streams live to your smartphone, smart tablet devices. Just go to the homepage of tfnn.com. Go over on the right-hand side. You'll see those three little smartphone buttons. Click on it. You'll catch this show streaming live. This stock chart here, the patterns that are on the Dow chart, just really a thing of beauty. You're taking a look at 1.272 butterflies. They also create a 3 drive to a top pattern. That's the highs that were put in on this little wide-ranging bar here on February the 1st, that high out there, 14,019.78. The Dow finally closing above that area. It closed, let's see, did it close above it? Did not close above it on February 12th, as it got up over it and decided no, it wasn't going to close there. But yesterday you did get a close at the 14,035. Is it enough to take out the resistance area? Well, it closed above resistance, that's for sure. That's the red horizontal line going across the screen, but not enough of conviction there to have taken out these patterns here to say that, okay, the Dow is ready to break out, unlike the S&P. Now, what has the Dow done this morning? Well, the low is 14,018.55. Remember, the swing point high that we're looking at is 14,019.78, or the candle is that I am looking at, because that is that set up the resistance area. That high there, 14,019, because of the bearish candle at following trading session. Old resistance could become new support out there. So, you bulls and bears, it's very simple. You want to be paying attention to the 14,019.78. It closed back below it today, and yesterday's move was just simply a little head fake out there. However, you have tested it this morning. When I say tested it, the top of the February 1st candle, you rejected and move higher. You now are setting up an area of support. Old resistance becomes new support. Let's go take a look here at gold and silver. We take a look at, well, actually platinum here. Here's the daily chart on platinum. Now you can see platinum pulling back strong this morning, doing it with some pretty good volume, 13,000 contracts here inside platinum. But if you take a look at what it is doing, if we take a look at swing points, its most recent swing point low was December the 28th out there. That low all the way up to the high put in on February 6th. You can see this morning here slicing through that 0.382 retracement. Says platinum wants to head to the $1,600 level, but still stronger than gold and silver. We'll go ahead and pull up the gold contract right now. Gold here completing at least one pattern this morning, and it's at its session lows or close to its session lows. That's the 1584 range. The 1584 range is the 0.786 retracement off of the low back in May of 2012. From that low to the high that was put in on October 5th, 2012, that is the area where it is now at in the price. You can also see a smaller 1.618 butterfly pattern, and so far you can also see that gold here in the oversold territory. Says that gold wants to be able to make a bottom sometime in the near future. We'll see candle-wise. The bulls will show themselves. They'll show themselves from a candle standpoint, may show themselves from a volume standpoint, but so far this morning they are not there. This is suggesting, and if we get a close below, convincingly below the 1584 level, we'll go and take a look at a intraday chart out here. You get a close below that, that says 1526 is where gold will be headed to. In fact, I'll just put this right now into a 30-minute chart. 30-minute chart is not showing any kind of bullishness at all inside here. In fact, what you had really was a continuation pattern. 30-minute chart. This is we're looking at the 7:10 a.m. Session out here. This is a falling three continuation pattern. You have this bar right here that moves down in the 7:10 a.m. time frame. You have 3-4 bars within the body. When I say within it, inside the body of that candle. You then get a close at 9:40, just below the close of 7:10. Continuation pattern to the downside. That is what that is setting up. The bulls not rushing in here on silver, and nor should you. If we take a look at the silver chart, here's the weekly silver chart. We showed this in the first hour. You want to be aware of this chart, the weekly chart, last Friday, as the metal started moving lower. What we saw a break of this rising trend line here that goes back into the 2008 time frame. Breaking that with some conviction is a heads up. This says that silver would like to come all the way back down now to the horizontal support of the September 30th lows, right around the $26.15 mark. That would really set up a pretty nice buy if the bulls decide to move in at that point as well. Let's go down the street here in Clearwater to David. David, thanks for calling. Thanks for holding. How are you this morning?
Outstanding. Steve, how are you this morning?
Excellent, excellent. You wanted to take a look at natural gas. So what are you doing? How can we help you?
Well, it's looking like it's formed within the last, let's see, last 4 trading days. Looks like it's formed the patented Rhodes 2-river. Yeah.
3-river, baby.
River? Is the move up yesterday considered the 3rd river?
Yeah, that's the 3-river morning star pattern out there, named after Oda Nobunaga. And we got an Oda Nobunaga in our Tiger's Den out here. Now, it did because you had that nice little piercing candle yesterday, getting more than halfway into that trading session from February 14th. So what that does, folks, is, sets up a nice area of support. And if we take a look at the actual natural gas contract, if you were just simply to draw a horizontal line across the screen, I'll go ahead and put this in black, and that's really dealing with that downdraft day from January 2nd out there. You can see that the lows, we had natural gas try to move up, and it moved up and never got above the body of that January 2nd level. It tested it, and we're going to go back to that today just to take a look at what today's trading action is doing, and then move back down into the January 9th level. So it really sets up a pretty nice area of horizontal support, and that's really what natural gas is doing. It's chipping away, David, in my opinion, it's chipping away at that next level of support down there that was really set up by that horizontal support, since the early part of January out here. Now, if we take a look at natural gas, are you long, looking to go long? What are you trying to do here?
I went long, not yesterday, but the day before yesterday, because we had a substantial test on lighter volume. We were hitting support, and then basically I took profit once, considering the high to be the high bar of February 13th. Once it hit, basically the 786 retracement of that, because I'm looking at the February 14th bar as a high volume wide price spread, is basically a point of resistance.
Yes.
Because we're moving up on lighter volume. So the reason for my call, I was kind of confused. On the one hand, today, we've gotten over the February 14th downdraft bar, and it looks like we're making a slight correction. So there's part of me that thinks, wait for it to come back to, let's say, the 618, because if you look intraday on it, you've got decent support at at slightly in between the 786 and the 618. Retracement off of yesterday's move up. So I was thinking, I'm thinking about going long, but then again, we had a test, on a lighter volume on a heavy significant downdraft. And I'm trying to figure out who's in charge here. Are the bears in charge or are the bulls in charge?
Well, first of all, congratulations. I like your entry into natural gas as a trade because, you're coming down into that support area. So it made it easy for a couple-day trade or what have you, or to take a long position to see if, in fact, natural gas could actually go ahead and break out. So congratulations. You picked the area to go ahead and take a day trade, intraday trade, or perhaps longer. And then you had that nice little follow through yesterday, setting up that Three River Morning Star candle formation. The real confirmation that this would want to move higher would be a close above that February 14th body. And so far today, what you've done is you've rejected that area. And as long as you travel with inside that body, that is still saying that the bears really still have control of natural gas. If you take a look at just some ultra short-term trend lines, you could come off of that little doji candle. In fact, that's when you had called on January 23rd. We were taking a look at those two dojis, and the question was, do those two dojis have meaning? And they absolutely did. We called it. We said, just watch to see how the leaves either fall off of the tree on the 24th, and they fell off the tree, and really set up the descending price channel that now is established inside the natural gas contract. But if you just simply go off of that top of that doji candle, what you can see is right now that's also acting. That's that black little diagonal line I just drew in there. You can see how price actually hit that area along with the horizontal resistance of that February 14th level, and that is right now acting as a kind of like dual resistance zones. But if natural gas can close above this, your potential on this, in my opinion, is really just the top of that descending price channel, right, downtrend channel out there. And because that is, you wouldn't have a real break until you could see natural gas get above that. But what would be nice is, you could trade this both ways. You'd love to see it go ahead and break out and actually test that area, because that would actually set up a nice short position.
Yes, it would.
If it moves up into that price channel, yeah. So these price channels are great to be able to draw on your chart patterns out there, folks, and it's easy to do. You want to make sure that you're using co-located opens and closes. So it doesn't matter whether it's the open or close of a body, but just try to get at least 3 of those to give you the best channel lines out there. So I hope that helps you, David.
Thank you very much, Dave.
Absolutely. Hey, thanks for calling, Dave. We've got the Dow up 13 points, S&P off 2. We'll be right back, folks. You can give us a call as well, 877-927-6648. We'd love to hear from you as well. Take care. Take care.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. The Dow up 18 points right now. S&P's off about 2, composite down 4. And back to the natural gas contract here just for a minute. You know, David from Clearwater had a nice entry in, and I went back a little bit further left on the stock chart. You know, we've got this little gap from September 27th out there. So a really nice line of support inside the natural gas contract. David got in during the trading session of February 15th. Out there. What we can see here is, though, we can really see where the bulls and bears have the battle lines drawn. Now, what we can see is the blue lines, if you're looking on Tiger TV, that is the descending price channel, downtrend channel. Used to be a subcorrection channel out there because it was traveling with inside the larger rising price channel out here off of the lows back in April of 2012. So it looks like it started a new channel line. We can see clearly where the support area is. And it looks to me like really what natural gas is trying to do is make a larger A to B equals CD down, but a nice area of support. And you want to use all of these support tools as much as you can, support or resistance tools, for being able to enter and exit a trade. This will go ahead and move up to the top of that channel line if it can close above the body from February 14th. That is the open at $3.20, about $3.30 is what we will call it out there. Let's go take a look at what is moving inside the Dow out here. You've got, I think it was Boeing. That was, a moment here, you had Boeing up $1.47. IBM, let's go take a look at IBM, is up $1.40 out there. That is really what's putting the energy inside the Dow right now. We can see IBM, quite a stock chart out here. Take a look at gaps. Gaps galore inside this stock chart. First, you've got the gap down with wide price spread. That was October 17th. Quite a gap. That gap has not been filled. The top of the gap would be the October 16th low. That is a price of 209.47. What we can see here is IBM got up to a high on January 28th at 206.22. So it never actually went ahead and tagged that area. In fact, what actually kind of kept it in place was the swing point that was created prior to the gap. And that's also really, if you take a look at Apple, that's what Apple has done as well. I'm going to go ahead and draw this across the screen. We'll go ahead and put this in black. I'm going to go ahead and move this number 1 if I can over down here. Okay, so if you take a look at the swing point that was created on IBM, it was the October 10th low of 205.05. What we can see here, that is the area that held as resistance as IBM. And IBM gapped up with some decent volume on the trading session of January 23rd. Moved up with 12.5 million. That gap down here on October 17th was 12.5 million shares. So up and down, setting up really a consolidation range. Now what we can see is the resistance zone happens to be the low of that swing point from October the 10th out there. Now that had 4 million shares. As IBM got up there, it did it with 2.8 million shares. Did it with 3.6 the following trading session, tried to get up there with 3.3, so not enough energy to bust it up. And then what IBM actually did was create this little island reversal out here, but there's so many gaps to the upside and the downside that IBM doesn't really know what it wants to do out here. Looks more like what it's really setting up is a little bit of a sideways consolidation range. Now, the low of that consolidation range really is right in here, which is set up by this gap down candle. So the low of October 17th, which is 198.55, price being contained within this sideways move right here. And that is what IBM is doing. Maybe it's going to try, volume today. 368,000 shares in 1 hour of trading, so not a lot of volume inside IBM on this move up. Maybe it comes in and tries to test the bottom of the February 5th candle out at the 202.51, but not a lot of conviction here one way or the other inside IBM. Let's go take a look at what is leading dollar-wise. You've got Boeing up $1.40. BA is the ticker symbol, so let's go see what Boeing is doing when they've got problems in that they are dealing with regard to their battery issue, which will be resolved most certainly out here. You do have, Boeing's got some pretty decent support here. Got high volume lows, and I suspect these will be tested as well. You've got one from January 8th that has 20 million shares to the downside. That area was tested and held. Let's draw the line across the bottom of the screen here. We'll go ahead and put this one in red. That area was tested, however, with volume, 22 million shares. That was on the trading session of January 7th, January 17th. You then had another test on January 29th with 9.2 million shares, so now you've got volume starting to drop off. This is really setting up a little sideways consolidation range inside Boeing as well. The upper portion of it happens to be the bottom of the swing point, it looks like. The swing point here, we'll go ahead and put this in red as well, from the high of January 4th out there, anywhere between 77.44 and 78.02. So you can see the trading range inside Boeing. Not a bad trading range, $72 to 77, 5 points out there. 877-927-6648. Pop into the upside. Joy Global up $4 and change. Cenacorp up 8% to the downside. Intuitive Surgical, brain salad surgery. Be right back.
Just recently on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Dow up 10 points right now. S&P's off 3. And let's take a look at Intuitive Surgical, down 17 points right now, off 3%. This is the weekly chart that we've got up on the screen here. It doesn't look too bad. If we take a look at the swing point out here, you'll be looking at the April 20th, 2012, 3.2 million shares up there. The swing point high has not been tested, but was coming in there with some pretty decent volume the week of January 25th, was coming in with 4 million shares out there. The next trading session, 1.4, so volume fell off the week of February 1st out there, but really still hanging up at these highs. We did see some institutional selling inside this equity. That was on December the 21st out there as it broke downtown with 6.5 million shares out there. On the day, that's the weekly chart that we're taking a look at as I pull this back here. Not a bad-looking chart at all. Looks like it completed. Let's take a look at the weekly A to B equals CD up pattern that it completed out here, approximately what it did. It completed the 1-to-1. Trading above that area may want to go ahead and make that 1 to 1.272 level. That's at about the 600 and looks like about 638 level out there. But let's take a look at the daily chart, see what we see here on the daily chart. A little bit more of a yo-yo. We can see where that institutional selling came in. It was the trading session of December 19th as it moved down with 2.5 million shares out there. But you did have a real nice sign of strength here. That sign of strength was coming off of January 22nd to January 23rd. Now, 1.7 million shares to the upside versus the 2.5 million shares to the downside. But take a look at that gap. That is a nice wide gap out there. And that gap here right now is holding as a support zone. So it looks like today this is going to be tested. Now, the first test was February the 7th, as this moved down with 181,000 shares, got to a low of 563.44. Now, at 563.44, what it did not do, it did not test the low of January 23rd. That was the gap up, and that was the low of that gap up session, which is actually 561 even Steven out there. But what you want to do is you want to have a little bit of flexibility and leverage to take a look at moving your support and horizontal lines up and down on any stock chart out here around the gap. So far this morning, though, volume 143,000 shares. So the last time down to this area did it with 570,000 shares. So volume for 1 hour, if I do my math right, it's coming in with a little bit more volume. Not the volume to break it downtown where it had 1.7 million shares on January 23rd, but look for the area of 561 to 563.44 to be the next area of test. If you can get several tests out here, then this gap may eventually be filled. But what it's really doing, it's really setting up more of a support zone. Now, all bets are off if you get it closed below the level of 561 out there. That's a trading session from January 23rd. Then that sets up a move back to fill the gap of created out of January 22nd. That would be at the high of 521.19. But Intuitive Surgical down $15 a leader in the clubhouse on the way down. Let's go take a look at some of these stocks here that are popping. Let's go take a look at Cena Corp. Cena Corp is the leader in the clubhouse on the way up. Dollar-wise, up $4.31. SINA is the ticker symbol, gapping up this morning. Let's go take a look at this equity here. Let's get rid of this little gap here. Cena Corp trying to take out a swing point. The swing point is January 24, 2.9 million shares there. So far in trading today, it's got the volume behind the move, 3.7 million shares. If it can take out that swing point, which would be a close above 58.77, would be setting up a fairly nice A to B equals CD up. Let's go take a look at that, and then we'll go see what it's actually going into. We'll look at investigate the left side of the chart. That would say that the Cena Corp would want to go ahead all the way back up to its swing point highs, which is the 69.52 is a 1-to-1 A to B equals CD. That would take you back to the September 14, 2012 swing point out there. That high was $70 even. Now let's take a little further back view of this stock chart, see if there's anything else. Cena had a nice sign of strength here in August, moved up with 14 million shares. When it came back and was testing the swing point lows, it got through an area that had acted as a support. Let's just go ahead and draw the most recent support level, which would be the swing point from July 18th. We'll go ahead and put this as a red line across the bottom of the screen out there. Well, first I have to actually hit the actual mark there. There we go. So the volume on that swing point on July 17th was 7.4 million shares. It moved down with volume, 8.3 million shares, broke below it, and then just simply traveled sideways for a few trading sessions. You never had much of a sign of strength here. In fact, when it moved up outside of that swing point, on December 12, 2012. What a great concert that was. Did it with only 3 million shares. So never really seen a sign of strength. The only sign of strength would have been this little gap right here, this little candle from December the 17th, and you had a little bit of volume. You had 4.7 million shares to the upside. So that was not a bad sign of strength. You can see what the equity did was it came back and it tested that area with lighter volume. Did it with 1.2 million shares. Of course, that was on Christmas Eve. That was on December 24th. Tested again on the 26th with 1.9 million shares. Again on the 27th with 1.2 million shares, going into 4.7. That was really your test rate out here that Cena Corp wanted to move higher. Now, its first move was into the area where it had gapped down. That was on the November 15th session. So you can see as Cena Corp went up into that level, December 19th was the first test, and it was 4.2 million shares going into that gap that had 3.2, but really was being benchmarked against that 10 million share level. So this thing really wanted to move higher. You can see that gap. This was the first time that it was tested. This is why you want to go ahead and draw your lines on your gaps and identify support and resistance. I'm going to draw this across the screen. We're going to go ahead and make this in black. So here was our gap down. which should be a resistance point. That is, I'm looking at the November 15, 2012 level. That's $50.99. And as Cenacorp made its way up there, created a little shooting star candle on December 19th, and didn't have enough volume to get up over it. It actually acted as resistance. Now, you hear me say that old resistance becomes what? Becomes new support. That's why you want to make sure that you understand your candlesticks out there, because that is what where the bulls and bears are continuously providing you with information. So we know because of the gaps, we know because of drawing horizontal resistance or support out there, that those are important benchmarks for us to be taking a look at trades. What does Cenacorp do? The next time that it gets up to test the resistance line, it gaps up over it. That was on January 2nd. So it gaps up over it, does it with a volume of 3.9 million shares, again, still being benchmarked against that 10.2. But really what takes over here, because that was at the bottom, that was at the low, what really comes into play here is that horizontal resistance line. Once you're up over it, just like we're taking a look at silver on the long-term chart, which has broken through a trend line out there. Well, you get horizontal and you have diagonal trend lines. This is, this really becomes our horizontal trend out here, our support area. Once you break up over a resistance level, what's likely going to happen? You're going to come back down and test it and find out if it was really a good break topside. What does Cenacorp do? Move sideways for a few sessions, and then on January 9th comes down with 2 million shares, test that gap. That old area of resistance now becomes support. It was testing it with lighter volume because you had 3.2 million shares on November 15th. It was also going into 4.2 million shares on December 19th. That's why you have Cenacorp continuing its move up out there. That's how you put it together, taking a look at gaps, horizontal support, and resistance, and why you want to make sure that you, because very, very powerful. Gaps are probably some of the most powerful areas of identifying support and resistance, and Lord knows we've got them all over the place. Now, that being said, that's why if you go back and you take a look at the Dow, you get the Dow right now is up 11 points. But if we do take a look at the Dow, here's the breakout session. Although there's not a gap here, if you take a look at the diamonds, most certainly there is a gap on the certainly on the New York Stock Exchange. Which, by the way, New York Stock Exchange right now, even with all these great moves that we've seen in the S&P 500, in the Russell 2000, the New York Stock Exchange, even though it took out its highs yesterday, it's actually screaming that it really wants a lower price. It's actually a weak link out there. And price-wise, yesterday it took out the island reversal candle. I'll go ahead and pull that up on the screen here in just a moment. But here we've got the Dow. We've got the old area that was the resistance line, which has been taken out, and we know it's been tested. That's why the level of 14,019 and 78 is so important for us to be paying attention to out there, and especially today, because yesterday was a break above that level. But where I do expect that the market on its pullback is going to come back into the January 2nd level out there, test the area where it had broken out from. And that would be really, if you take a look at the retracements off of the November 16th low, and we'll put it into the high that was established here today so far, you'll see that right at the bottom of January 2nd, the high of December 31st, nothing more than a 0.618 retracement. That should be your expectation when we see a reversal signal in the marketplace. And we will, folks. They talk in the media here about everybody's expecting a pullback. However, not everybody's playing a pullback. In fact, there aren't that many people. I don't think there's that many folks that are actually short the marketplace. And what we're seeing here, all the way up here, once it breaks through this little consolidation areas, once it breaks, if the Dow does break the low of, let's say, January 31st, that low is 13,860 or so. There's nothing else. There's no more horizontal cluster to hold the Dow. So the Dow would make a quick move, should make a quick move down into the January 2nd, December 31st. It'll probably be one of those moves. It's one of those scary moves that'll have everybody freaked out. And that's actually where you want to start taking a look at perhaps buying and coming into the market, because we've had a nice A to B leg on the way up, whether it's the Dow or the S&P or whatever index it is that you might trade. Now, let's go take a look at the New York Stock Exchange and see what we have out there on the NYSE. Let's pull that up here. Let's take a look at the NYSE. Having a nice day yesterday, going and rescuing passengers. Those are the passengers that were on the island here that was created on February 1st. That island high was 89.70 out there. Yesterday, you closed at the top of its session at 9,004. 9,004 is where it closed. So far today, really just having an inside day. So this is more of a resting candle. It's not a reversal candle or anything like that. But there is a way, and I'm going to be sharing it with folks this evening, showing how to be able to identify the real weakness that is inside the New York Stock Exchange. And folks, if you haven't had a chance, it's going to be a great workshop tonight. It will absolutely be, my opinion, my finest work. And I like the work that I've done in the past out there. You can check it out. It's very easy. On the homepage of TFNN.com, underneath breaking news, you'll see reading the message of the markets. It's very easy to enter. You need to be a subscriber of mine, but that's simple to do. My subscribership comes with a 30-day unconditional money-back guarantee. I am going to give you the form. This is not a 1 hour. It's going to be a very impactful 1 hour workshop. I am so excited because I know that I'm going to change some people's lives. I'm going to provide tools. This isn't a workshop where I'm going to kind of give you a global overview of a tool that you can use. I'm going to give you the exact formula for being able to bake cookies in this market, or pie, or whatever your favorite meal or dessert might be, and going to provide you with exactly the trading system used to produce incredible results out there, as well as, the tool that I'm sharing, folks, it called the dot-com bubble high. They called the 1987 high. It called the 1928 high out there. It called the low in March of 2009. Very powerful set of indicators, patterns, tools out there. That's what we're going to be taking a look at tonight with an exact trading program. So you want to go ahead and get in on this. Again, go to the homepage of TFNN.com, sign up for it. You'll be so happy that you did. So I'm looking forward to everybody that has signed up. Thanks so much for doing that. I am looking forward to this evening's session. Let's go take a look at, let's go check in on, let's see, what do we want to check in on? If we take a look at gold's now down at the 1579 level. I believe it was 1584. So let's go peek in on gold. It's breaking through that level. So you can see here that continuation candle. This is on the gold contract. And we'll be talking about that tonight as well, because it's an important tool to have in your bag. You want to understand these bodies of candles, because they truly are the essence of price. And you want to see some type of conviction break to one side or the other. In the case of gold, you would take a look at this candle here at 740 this morning, think that maybe the bulls are coming in, but they were not coming in. This would not be a bullish candle until it would be a close above the open, which was 1594. Instead here, over a series of 5-6 candles, you get a break below it. All it is, it's a continuation pattern to the downside out here. We can also see, and this is just simply a 10-minute chart that we're looking at, you've got some real pressure out here, 21,000 contracts in that 1030, 1040 session out here. Lightening up a bit here. We've got 2 minutes left in this trading session, where you've got gold only about 7,000 contracts. But what we do know that we have, as we come take a look at the daily chart, gold now breaking through the 0.786 retracement, doing it with volume picking up to the downside. That says this butterfly is the most likely going to fail, and we will see gold moving down into the lows of May 16th out there, right around the 1526, I apologize, into the 1526 level out there. Let's go peek in on silver and see what it is also doing. It looks like it's got more conviction to the downside. Let's take a look at this on the daily chart out here. Here is the daily chart. So it's got some volume here this morning as we pull this over. Volume so far in its trading session, it's going to have more volume than yesterday. Already 55,000 contracts. Yesterday did 70,000 contracts, truly breaking the B point of an A to B equals CD down. In fact, we'll take a look at the larger A to B equals CD down from the 4th of January. 877-927-6648. We'll be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you could be granted one wish when it comes to trading and investing, what would it be? Would you like to learn how to make consistent profits on a continuous basis? I'm Steve Rhodes with TFNN, and recently I discovered a trading pattern more powerful than anything I've ever experienced before. This pattern works on all instruments and all time frames, and on February 20th from 6:30 to 7:30 p.m., I'll teach you how to master this pattern and show you how if you began trading with $100,000 on September 14th, 2012, you could have created $35,000 in profits in 4 short months. This trading pattern will transform your life, and the live online webinar is available to subscribers of my Mastering Probability newsletter. And now is the perfect time to sign up. Plus, if you're not completely satisfied for any reason whatsoever, it comes with a 30-day money-back guarantee with absolutely nothing at risk. This is a decision you won't regret. 60 minutes that will change the way you trade forever. Sign up for Mastering Probability today at tfnn.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. The Dow off 4 points, S&P off 4 as well, and the larger A to B equals CD down. On the weekly contract, we're going to take a look at for the silver. We're going to come off of the swing point high. Last time it was up at its resistance point, which was the top of the consolidation area. That's your October 5th level at about the 45 cent range. That's your A point. Your B point is a swing point that silver is taking out right now. That's your January 4th low. That is the $29.24 area being taken out with that conviction. Just your 1-to-1 A to B equals CD takes you where? Right down to the bottom of the trading range. That's the horizontal trading range. That's the lows from September of 2011. That's the $26.15 area. Now that is just a 1-to-1 A to B equals CD. If silver breaks that level, then you've got some additional areas. Actually, probably got a butterfly pattern that would set up. You got the $24 level, then the $22 level next. But one thing at a time. Does look like silver wants to at least make that 1-to-1 A to B equals CD down and take you back to the lows of September. It if we go peek in on Apple here, because leading things to the downside, you've got Intuitive Surgical, CF Holdings, as well as Apple. Apple now down $7 and change. Apple trading into now the swing point low from January 25th. Doing it with lighter volume. 43 million shares is on that swing point. So far in an hour and 25 minutes, 6.2 million shares. So lighter volume as it moves into that area. Let's take a look at Apple on a intraday chart here, 10-minute chart, see what we see from a volume standpoint. So volume not exactly picking up to the downside at all, but just simply on the 10-minute chart working off that little oversold condition by just simply moving sideways out here. So Apple, if it closes inside the swing point, let's go back to the daily chart. I'll give you that number again. If it closes inside the January 25th high, that would be less than 456.23. Apple will go ahead and test the lows at 435 before releasing the next piece of information for us. Let's go take a look at MasterCard. MasterCard now, that's only down $4 and change. What do we have down here that's big? How about Millennia Media? Millennia Media, I think they're going to acquire privately held Metavasier or something. Metrasolver. Anyways, I can't pronounce it. But let's go take a look and see what the stock chart is doing. Totally getting, I don't know it must be a stock deal. So let's go take a look at MM out here. If I can type that actually into the system here. And we can see this is down with a big volume. Let's go see what this is moving against out here. Okay, how about this? So this is an IPO. Looks like going back to March 29th, 2012 out here. And this is now, pretty much back at its lows. The lows were put in on August 3rd. 235,000 shares down there. So far today, this has traded 9.4 million shares. But I don't know what the deal is here. Looks to me like probably was a stock deal here. But that is on Millennia Media out there. Let's go take a look at what else we have moving here percentage-wise to the downside. Life Technologies. What was behind Life Technologies? Anything there? No. So let's go take a look at Life Technologies, LIFE, having some life taken out of it today. Come on, Steve-O, type. L-I. That's pretty bad typing there. Okay, LIFE, gapping down. Okay, so this is trying to move down into a area where, so it's created a little island out here, it looks like. Has it? Yeah, I think it has. Let me see. At its highs. Well, that's pretty interesting. Okay. So let's take, this has created an island reversal, I believe. Let's take a look and make sure. Let's go mark the points on here. Most certainly has. You take this equity here, broke out with conviction here. We'll have to take a look at this further tomorrow. Broke out with conviction on January 28th with volume. And we'll come back and take a look at it because it's created this little island out here. Folks, stay tuned for Basil Chapman. And always remember this, folks. You have an amazing power within yourself. That power is so strong it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, and create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great day. I look forward to seeing you tonight at 6:30. Take care, folks.